Stock of the day. Look, I thought we'd take a look at Charter Hall Retail REIT. We've talked about REITs, Real Estate Investment Trusts, here on the call a lot. They've been absolutely smashed in 2023. Most are travelling at about a 30% discount to their asset backing, as fears of what if there are property sales and big devaluations, will that flow through to unit prices? And the market's anticipated that it would. But Charter Hall Retail REIT is expecting operating earnings next financial year to be 28 cents per unit after announcing the sale of 2 shopping centres for $225.5 million. Now, the property investment management company will sell Southgate Square in South Australia for $91 million and Rosebud Plaza in Victoria for $134.5. Now, Chief Executive Ben Ellis says the sales demonstrate the company's ongoing active asset management and were in line with the valuation as of June 2023. So there was no massive devaluation in these asset sales, as has been expected by markets. And that's the reason given why most of these REITs are trading at massive discounts to their asset value. Do you take some comfort in this, Mark Moreland?
No.
Why not? I thought this would be a good thing.
No.
All of a sudden, we've got a trust that has sold something.
Yeah. Two somethings.
Yeah, 2 somethings for what it's valued on their books for.
And when was it valued on their books? What day?
June 2023.
That's last year. That's this year.
Yeah,
that's June 23.
Yeah,
so they've sold it. I see what you mean. So they've already impaired it, have they? And then
well,
no.
They
at the time in the last valuation.
No, it wasn't.
The problem is though with the discount cash rate for business with interest rates at 5%. These REITs have been pushed down well below their asset value because the market, I think, rightly is assuming that they're not reflecting real value if you had to liquidate it.
Yep.
So the asset values are held up because of there's been no transactions basically. So there's no transactions, there's no price discovery.
So
now, here's 2 transactions.
That's why I thought I'd do it as stock of the day.
Yeah, okay, it's interesting, but it doesn't convince me that the discounts on the REITs are not correct.
Right.
Yeah, I think if anything, they particularly depending on which REIT it is. If you're in industrial, it's much stronger than retail or office.
Like Goodman.
So if you're an office REIT, Goodman's I think the pick of the REITs. But if you go office REITs, I think the discounts are probably not enough, and they'll end up being more eventually when they.
But retail discounts.
Well, retail's a bit harder because they're obviously those shopping centres have got very good occupancy.
Right.
They're probably 98% or something.
Right.
And most of them are in leases. So the performance of the shopping centres in that case are probably still quite good.
Okay.
Now going long term, who knows?
Right.
Yeah.
Okay. So.
But the other problem is if I look at it. Conscious Investor's showing a negative 8% a year return. It's on a 24 PE at the moment.
Right.
So it's at the top of the red, which is very high. Now the earnings have come down. They've really dropped from the year before, 81 cents down to 14 cents in 23, which is back to where they were in 2020. So they had a big run up and then a run down. And their sales per share have been sliding, and that's a good indicator because that's negative 8% a year over the last 5 years. So sales revenue has been going down slightly. That's not encouraging,
right?
Because then obviously, how do you get earnings growth unless you're running more efficiently or you're actually extracting more profit for every dollar of revenue? And that's negative. So that to me would be negative as well.
Right. Okay.
But overall, the return on equity has been return on capital is 2%, return on equity 3%. It's woeful.
Okay.
We don't want at least 10,
right.
So we wouldn't touch it.
Okay. So this doesn't indicate to you there could be a turnaround?
No, I think you're right though. It's interesting. It's a little bit of evidence. Let's see what happens when the
market may have overreacted.
I don't buy it.
Right. Okay.
Yeah.
Jessica, do you buy it?
No.
Oh, I thought this was going to be the bell for the bottom of the REIT market, but neither of you are convinced.
No, it's a no for me. So the growth, which March touched on, that's pretty much there. I don't really see growth really turning around. I do love a property company. I do love a developer. I would prefer industrial exposure, not office, not retail. And then the other part of the business that is attractive to some. The instos who hold it, they're pretty much holding it for that yield.
Yeah.
I mean, apart from having some property in the portfolio, you're getting a bit of a yield there, but it's only like 6% grossed up. It's about 7%. So I don't really think it's that compelling. I would prefer to wait and see, the RBA to go, hey, white flag,
Right.
interest rates can be cut, and then that'll be a tailwind for the retail space, and that'll encourage lease take up as well.
Yep.
And of course, property prices.
So do you think REITs are bottom though? Is that going to be a turnaround sector for 2024, or we're going to get more of the same?
I think there's 3 different property markets in the property space. I think the industrials are kind of like,
Which haven't been crunched at all.
Totally.
Still
They're the
going
stalwarts.
well.
Yeah. But the retails and the office, maybe potentially a bottom, maybe Q1, Q2.
Right.
And I think that's probably going to be coinciding with some bad data from
Right.
Australia. That's my take. And the futures are saying, peak unemployment later this year. So later, pardon me, in 2025, 2024, I'm getting my years mixed up. I'm already excited about the year ahead. So I think that's probably when the market will start pricing in the bottom.
Okay.
Not yet.
All right. Okay.
So I
it
add
might be a
one
bit
thing
too
to that
early.
too. It's just one other point because you're making me think about that,
Yeah.
and that is that most of the REITs don't have high debt levels at the moment. So that's good because it all comes back to redemptions.
Yep.
So let's say the market decides REITs are a bad place to be and redemptions go up and forces more sales, that will sort of tend to leverage them down.
Yep.
Right.
And that hasn't happened, but it could happen.
Okay.
Well, I don't mean specifically for the REITs, but if we have a market downturn, people go grab money wherever they can.
Sure.
And then you get a few of them saying, we're freezing redemptions, and that tends to panic everybody else.
Yeah, that certainly does. No sign of that at the moment, we should say.